process. All right, guys. Hey, Paul McClain here, Family First Life West Coast. I want to come to you today and talk to you about products. So that's the first thing that everybody kind of, thinks that they need to know, right? I need to know products. Like, what do I do? What products? What does that look like? And so I'm going to break it down in less than 4 minutes for you. So what we do is term and whole life. Those are the two main products. Term is temporary, covers for a block of time. Typically, you get your money back at the end of it. Whole life is permanent. Death benefits level for life. Premium is level for life. Cash value is guaranteed. So after like 5, 6, 7 years, you'll have on average about 25% of what you put in. It'll be accessible to take loans out or use it. Those are the two products. That's it. Guess what happens when you die? You die, they both pay out. The death benefit, right? So that's the simplicity of it. So a lot of times when we're kind of uncomfortable, what we think we need to know is not what we really need to know. What you need to do is go book your first 100 appointments as quickly as possible. All right. So that's the rudimentary, agent that's brand new, the rudimentary stuff as far as what you need to know to go out there and sit with clients. So you say, what about the company? They all have the same products, just different names. It's all the same chassis. Americo's got HMS. That's the same version of Term Life Express and Mutual of Omaha. Same version as Safe Shield with CFG. Mutual Omaha's got Living Promise, same as Eagle Premier. So all the same kind of stuff, just different names, so to speak. All right, now you're sitting with the client. How do you explain this to a client and do what we always say is every time you have an opportunity to separate yourself from the salesperson that they might have thought you were walking in to the field underwriter, the person that's there to serve them, that's on their side, that's the assistant buyer, the antithesis of a so-called salesperson, right? So what does that look like? I'll say, Rochelle, listen, so do you kind of have an idea of what life insurance is, like what that looks like? Like term, whole life? So you just say yes. So I'll say, I'm gonna give you a quick, like 1 minute overview. So I'm gonna collapse like years of education and licensing into 1 minute. You ready? It's gonna be really good. So life insurance is pretty simple. You got term, and I'll write temporary above it. So which is temporary. Coverage for a block of years, like 10, 15, 20, 25, 30, right? A lot of times if it's set up right, you get your money back at the end. So it's like a savings account. You got whole life. Whole life is permanent. It's like you own the insurance. It's permanent. Term, temporary, whole life, permanent, forever. So whole life has got the level death benefit, level premium, level cash value. Now I have some clients say, well, which one is the best? Because I'll have this one person say, man, term is great, whole life's terrible. And then this other person says, whole life is great, term is terrible. And what you're listening to is captive salespersons, one that only sells term, so therefore whole life is not good. One that only sells whole life, captive, which means that term is not good because they're biased to what they know and what company they work for. So I'll say it's pretty simple. That's how that works. So for you guys, now I'm gonna package it, whatever I want them to get, I'm gonna package more value in that one. So if you are 72 years old, I'm gonna say, listen, Bob, so term is really good. Most of the clients I sit with are like 20, 30, 40. They have a lot more like need. They got maybe a lot of debt, mortgage. They got kids running around the house, college for the kids. If they pass away tomorrow, there's still a lot of years left for the kids to go through, to be provided for, to needed, funding for. And so term is going to give them a lot of protection for a low price. And then when it ends in like 20 years, they're not going to be so old or so much older where to renew it, it's 8 times higher. So permanent whole life, that is going to be locked in forever. So anybody that I sit with that's like 55 plus, 60 plus, they're all looking at whole life because it's going to be there no matter how long they live. No matter what age they make it to, it's always there. The premium stays the same. Death benefit stays the same. It's got a guaranteed cash value so they can pull from if they ever needed to. So that's what everybody does. In your situation, they're more looking at the whole life. Does that make sense? Yes. So all I've done throughout explaining that, also the underlining, the thing that's almost not seen, which matters significantly more than just a simple education, is that I'm not a captive sales rep that says one's better than the other. They're both good. It depends on your unique situation, what's going to make the most sense for you. And so now they see me more in the light that I want to be seen in. So hope this helps, guys. Make it a massive week, and we'll talk to you soon. See you. Bye-bye.